Hi everyone, welcome back to the 10th episode of the Learn, Invest, Grow Show. I'm Tay and my partner Adam is also here. Hey Adam, can you believe we're reaching the 10th episode already? Time does fly indeed, right?
Time flies when you're having fun.
Exactly, man. I can't agree more with you on that. Yeah. Everyone, continuing on our betting sponsor series, we're gonna share the conclusion of our first-hand due diligence on Cardone Capital today. Previously in our episode, we shared what we initially got from Cardone Capital, and we have been waiting patiently for them to provide what we asked for, such as the this invalidation of a Grant Cardone's venerable, as they claimed, 35 years of experience in real estate, and also past investment with detailed operating history and actual financial, not projected, because that's what we got. Yeah. And Adam, can you summarize our overall communication with Cardone Capital so far?
Sure. It's been so. First off, I want to make sure that everybody understands this is our own opinion, but the way we feel is it's pathetic. It really is. Usually when we deal with sponsors, they want to show you everything. I mean, the good ones at least will show you the good and bad. They may tell you, hey, we've been doing good, but hey, we did have this one. They'll tell you. They'll forthcoming. I feel like with them, it was from the initial call was mostly like, oh, Grant Cardone, and it's all about him and the beautiful properties they're buying, and it's not really that. For a savvy investor, you're gonna look past that, but for novices, beginners, you're gonna if like I was sold originally when I went to his conference. I flew out to Vegas. I read his
Right.
books. Yeah, he does say a lot of good stuff. And we're looking for new operators. We're doing, multifamily's hot. We're becoming a renter nation for, if you're for a landlord nation for residential rentals. Okay, and I am very bullish on that, or we're very bullish on that, and so are a lot of others. And what's interesting is we're seeing advertisements for Cardone Capital. Once you visit their website, they have retargeting ads. So I'm seeing them myself. Their ads for let me show you their website too. Let me pull it up as well, which is really interesting. Give me a second. But so you see an ad like new opportunity fund seeking distressed assets. Okay, so I'm like, you know what? Let's talk to them. It's a big name. Uh, so we called up, and basically it was all about Cardone. They're trying to talk us into this new deal they're doing, and from the sound of it, it wasn't very attractive based upon they said it's an opportunity fund seeking distressed assets, but this is not a distressed asset. They're buying at a 94% occupancy. They call us a coupon clipper. They're buying. They said there's no really room for increasing rents, and they're borrowing money really cheap, where they could buy at a 4% cap rate, which was a discount. Hey, what was the discount again?
Yeah, so we explicitly asked him, okay, where this opportunity really coming from, and they really specifically mentioned the fact that their original asking price for the property was a 170 million, and instead they got it from 164 million, which is translated into 3.5% discount. So that was really the biggest source of their opportunity.
New opportunity fund seeking distressed assets. Again, our personal opinion, this is not a distressed asset. They are paying, seems like a pre-COVID pricing. And, they sent me a text message of the new deal, and they sent us, we asked for a CoStar underwriting report. We have not received that. But putting all this aside, look, forget about this opportunity. I really want to look at Cardone. We really want to verify his track record. So what's interesting too was, so we asked for certain things, but really putting all this aside, you want to go back to the blueprint that we created, and you really want to start from the beginning. Vet the sponsor, then the asset. So putting the asset aside, we actually I wrote an email. What was it? 8 days ago. They finally responded to me about a week ago, but I had to follow up on this email as well. And my email was very basic. This is how you should. This is something that it's very common to ask, and or if you're an investor, you would ask this: is okay. We have conducted some we have conducted some brief research, and we're hoping you could help us with further due diligence. Could you please help verify the following? Mr. Cardone's 35 years of real estate investing experience, past investments with detailed operating histories, and actual audit, if available. They may not have audit financials, but if it's available, it'll be nice to have, of the financial results. And then we want dependable references. Institutional investors, we like to know that a sponsor has institutional capital partners. Individual investors, maybe some lenders. I didn't put that in the email, lenders, but we asked for institutional investors and individual investors because we want to speak with them about their experience with Cardone Capital. Keep in mind, again, this took a week to get a response back, and I had to follow up with an email about this response. And then this is where it gets very interesting. This is the icing on the cake. It left us scratching our heads like, and I asked other people, they're just like, wow. So I get an email back. It was a very short email, actually. and the email says, the SEC, he said, good morning, Adam. The SEC limits what we can send out. So I can only provide statistics from the exits we've had since Cardone Capital's existence. I will attach our last 6 exits below. In regards to references, you will find more than 1,500 on Cardone Capital. Those are the Google reviews. Now, Tei, how bizarre is this answer?
Yeah, I mean, it's really a revelation to me too. I mean, if there's a SEC limitation imposed on the scope of what we can share, because I mean, in our opinion, like SEC is always very big on increasing the disclosure for the investor, so that investor can make an informed decision. So, I mean, the listeners out there, like, please share with us if you are aware of any sort of like a limitation from the SEC side. So we want to know more about this limitation. But then, yeah, so basically, like, we didn't feel really informed enough to move forward with the more in-depth due diligence or even investment for that matter. Yeah.
And really, it's they have the lawsuit, the SEC. They have a class action lawsuit with investors claiming that if you let's Google Cardone. Give me a second. Let me just I'm having a little trouble here. Give me a second. My computer's acting a little weird. Let's Google Cardone Capital. Cardone Capital. And this is what you should be doing. Like, you want to do research. Google. There's a lot of information. Sorry, I'm just typing with one hand. There's a lot of information out there. So when you Google, you're going to see this. I don't believe all this stuff, but you see the real deal, class action lawsuit, that they're misleading investors. So they're holding back information. And I feel this, and I know we both feel this, Tei and I, that they are withholding information. I don't see this as, I have to check with other resources, but it doesn't make any sense why they cannot show past deals they've done. Because think about it, if you're opening up a new fund, how are you going to convince your lenders and investors to lend or invest with you? You're going to want to see a track record, and that just I don't understand. Maybe I'm missing something, but I spoke to a few um, professionals in the industry that, and they never heard of that. I've we deal with sponsors regularly, and I've never. I mean, we even have audit financials with a sponsor. Not sorry, preliminary financials. We're gonna have the audit Q one of next year, which shows everything what's going on. And
Yeah, all the material we request are pretty much easily obtainable from other sponsors, right? Yeah.
okay. And if you have to sign a confidentiality agreement, that's fine. But to say that the SEC is limiting that, is anybody else out there uh, like could chime in on this subject? Is anybody out there that wants to give us a little bit more confidence if we should continue looking into them? But based upon what we're going through, we're not interested in opening up a fund, a feeder fund to invest with them. I'm not. I don't want to invest my own money. I know Tay, you don't want to invest. I'm not going to
No,
refer
yeah.
my family and friends to invest with us or any potential new investors or international investors you're dealing with in Korea. We spoke to them because we're trying to make a deal, but we can't even get past the first steps. And then I start Googling Cardone about I want to watch some of his videos. He starts talking. Some of the stuff he says, it doesn't make any sense about single family homes. And I think we're gonna close a chapter on this and say, you know what, we're not moving forward, Cardone, due to our own personal reasons. We want to validate his track record. We want to have real references, not Google reviews. And I want to see how that SEC lawsuit unfolds. But based upon the communication, I'm not even interested in wasting our time. And that deal that they're talking about investing for Fund 10, it's not a discount. It does. They should not mislead investors as an opportunity fund, and they're paying a premium for it. Yes, they want to own that asset, but yeah, of course, you're gonna have to win. You're gonna have to be the winning offer or bid to be awarded that asset. And are they overpaying? They could be. I don't know. But a closer underwriting report will help. We don't even have that. But I'm not even going forward. We're not even interested in looking any further into this. And we're going to close this chapter. And then I want to smash the belief of Grant's basically his negative. Help me think of it. The negative investor sentiment on single family homes.
Yeah.
And my father has done very well owning single family homes. And there's a lot of institutional investors coming into the market. We're investing in single family homes at more of an institutional level, similar to like the Blackstones and others. There's a lot of money being pumped in, and we're going to fact check them on that. And that's it. So we're going to leave off with this, close the chapter, move on to the next and talk about single family homes. And anybody that wants to chime in, I know there's me, Kevin, out there. I know there's others. Please share your thoughts on this SEC limitation on showing historical financials or past exits. I mean, my hands are up. I'm over this. I'm moving on. And for all those investors out there that are investing with them, I really hope that it goes very well. One more thing I want to mention, I forgot to mention, was they had a 6% preferred return. And they said they're doing away with that because there's not enough cash flow to meet a 6% preferred return. And yeah, at a 4% cap rate going in with a levered return of cash flow of it's like 5%. Yeah, you're not going to be a 6% pref. And there's no really increase. I mean, they're hoping for appreciation, but it's more of they call it a coupon clipper. So this is not a discount, not a good deal. We're not investing in any of his deals. I don't think it's a good deal. And I'm not investing with the sponsor because we cannot validate their track record. So number one, does not pass our criteria for a sponsor of track record. Maybe he has it, but they don't want to show it, so I'm out or we're out. And number two, if we were to move past that, I don't think this is a good deal. I think they're just doing deals to do deals to collect their fee fee driven. And hey, you have to watch out for sponsors like that. And I think this is a sponsor that's doing that. When you're and now that's our opinion, but I think that's what the case is.
Yeah, plus we're also expecting transparency from sponsors. So like an open book, right? So when we have a question or concern and we communicate them to our existing sponsor, yeah, they just provide all the information and answer to our satisfaction. So we actually expecting to get the responsiveness and transparency from Cardone Capital, but unfortunately, yeah, we didn't really get the impression. So that's
Zero.
another reason. Yeah.
Very salesy. They sent this a prospectus actually. Actually, you know what? Before we're done, let me show you this. Gets really interesting too. I mean, not interesting, it's kind of. So this is what they sent me for realized results. And by the way, they didn't have me sign a confidentiality agreement, so they never said I couldn't share this. So I figured there's no restriction. They didn't say we couldn't do that. But so I'm showing you this is their track record from 2018. Doesn't seem, I don't know, doesn't give us a lot of information. Is this deal level or is this to the LP? I think this is probably deal level. It's got to be. And then let's look at their prospectus. This is their prospectus. Beautiful, very nice building down in, I think, Miami. Got the flag. Everything's about Cardone. Him. It's all about him too. It seems like, hey, what was that thing you said about people like this? You got to watch out for. What everything's about. You told me.
Yeah, I wouldn't say that in this video, but it was more like our private conversation.
But yeah,
Yeah.
Where's the team? They don't even mention the team. Which is,
yeah, and also when we visit the website, though, we see the bio of Cardone only, Mr. Cardone only. When we trying to see the bios of other team members, yeah, we cannot see anything further than their name and title.
No credit to any of his team members. He does it all himself. It looks like, stability, cash flow. I agree. There's tax benefits. There's leverage. I don't know about depreciation. That's speculation. But
I mean, basically, what's really interesting is that when we look at these the prospectus, because the scope of what's in the prospectus may vary, but we believe the prospectus is designed to provide investors with enough detail so that they can make an informed decision. I mean, I think I would say a 50% or more of this space is dedicated to pictures. I mean, beautiful picture though. Yeah.
I think people invest and they're like, I'm investing with Grant and look at this. He's our partner. So I don't know. Look, I was kind of hoping we could do the same thing actually, but for the lack of transparency and the deal itself and not, we're out. That's it. We're not interested. And I really hope people could chime in because that SEC limitation thing really, 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 it's a really, I don't believe that's the case. I don't know 100%, but anybody want to chime in? I'm gonna speak to our attorney, our SEC attorney. I really want to get that, but I don't believe that's the case. Maybe I'm wrong, but I don't see it. And that's it. So, Tay, we're gonna wrap this up. Anything else you want to give to our audience, Tay?
No, I mean, yeah, so as Adam mentioned, yeah, please leave us a comment below. Yeah, if you're willing to share your experience, any experience with the Cardone Capital, and if you receive any other documents we mentioned. And yeah, thank you for watching, everyone. Yeah,
we have the blueprint too, so we're gonna attach a link to the blueprint. Just follow step by step. Exactly what I showed you, that email. Those are certain questions you could ask and see how they respond. And if you get an answer like that, I wouldn't walk away. I would run. That's really my opinion, my own opinion or our opinion. We're not moving forward, but for the sake of, are we trying to have popularity because of Cardone? Absolutely. He's a huge social media, entrepreneur. I think it's amazing what he's done. I think it's amazing that he's able to raise a lot of capital through crowdfunding. I think a lot of stuff that he's doing is great. I'm not gonna take that away from him. But for the obvious reasons that I showed, this isn't Cardone Capital is not for us. But maybe people, there's maybe a lot of people that are happy, but we'll see. Time will tell. Time will tell with that lawsuit. Time will tell from 10 years from now when all how or sooner how those things materialize, those deals.
Mm-hmm.
Hopefully it works out well. I really do, but that's it. And we're going to smash the belief on SFR. We're going to move on to that topic. That is an exciting topic I'm very excited about. This to me is boring. There's no you're not making money. You're making what? Hopefully 5% and an exit. I don't know. Boring. Beautiful asset, but you're not living there. So who cares? So it's crazy. But that's it. So until next time, smash the like button, share, talk to your friends. And until next time, happy investing, everyone.
Happy investing, everyone. Yep.
Take care now. Bye.